would it take for the Fed to make an insurance cut?
So at this point in the cycle, it's got to be something more than just inflation is low. Because there are transitory factors there, and the fact that the labor market is still strengthening means the economy must be growing above potential, and therefore no insurance cut is needed to lift inflation. On the growth side, then, what does it take to lose the fact that the economy is growing above potential? So you would look for deterioration in the labor market. So let's say trade disputes linger on such that it hits corporate decision making, capex in a way that you start to see it really hit the labor market, and the unemployment rate stops falling. That's the kind of scenario that gets you to so-called insurance cuts. At that time, though, they won't know if it's insurance cuts or the start of just a cutting cycle. The Fed would be heading off recession, so to speak. And we're not there yet. I mean, I think the bar is very high today for them to move up or down. And they're going to keep dismissing trade for the time being, saying we just don't see it in the real data, similar to what they did last summer. Last summer, they weren't so quick to react to trade. Last thing you want to do is cut, and then 2 weeks later, everything looks okay.
Given what Jim Bullard just said, you got to think that there was a discussion about the potential for cutting rates, though. I mean, you talked about maybe the Fed having been a little premature. Will we see that in today's minutes? Will it be sort of hidden in there somewhere? Well,
I think certainly the fact that Bullard has said that, he was in that meeting, and so it might be noted that a couple of participants, a few participants talked about what it might take for the Fed to cut. And that would just simply be in keeping with the number that we've heard from that have talked about insurance cuts. But I think what you're going to see is that the overwhelming majority are not going to be in favor of, or will express that they don't see conditions today that warrant a rate cut. I think the trade front, at least in my conversation with investors, is where they're more focused. If it just follows the spirit of the meeting, the minutes, then it would talk about trade in a way that was more positive. I don't think we get that. And if that were to happen, it would just be dismissed as old news. I don't think we get that, though, because these minutes are revised and edited all the way up until the day of release. And so it gives participants a chance to say, that sounds too flippant on trade. I think I recall we were a little more worried on trade at the meeting, and so it would affect the tone. So I think the tone actually could end up sounding more dovish than what the actual meeting did. Because recall at the meeting, it came out sounding quite hawkish.